Okay, good afternoon, dear students. How are we all? Doing good? Very good afternoon, everyone. Okay, so today our topic for discussion for revision is the management of working capital. That's the last topic of our study material, maybe. I don't remember the number, but yes, that comes in the second part of our module. And this is one of the areas of finance manager that we are targeting is deciding where to put the money, because in finance a finance manager is supposed to be simply deciding where to get the funds and simply where to invest the money, right? So we want to know what are the sources from where we are going to get the funds and what are the areas where we are going to invest it. So as far as investment is concerned, we can invest in long-term assets, for which we do have the chapter of investment decisions or capital budgeting, which we call it as. And then the other area where we can invest our money is the working capital or the current assets, right? So this is that particular chapter which is targeting the So this is a particular chapter that is targeting the working capital part. So this chapter can be broadly divided into multiple areas. One is regarding estimation of the working capital. Second is management of the debtors. Third is management of the receivables, right? Receivables, payables, inventory management, then cash management. These are multiple smaller parts. So today's session, we are going to be focused on, we're going to be dedicated towards the first part only. The rest part of the chapter, which is management of receivables, payables, inventory, cash, and all, we'll take it up probably in the next session. So in this current session, we'll be looking at the estimation and other aspects of working capital. So let's get started with the working capital part. Okay. In working capital, the entire task begins with understanding something called as operating cycle. Okay, so it begins with understanding what we mean by operating cycle, and then using those operating cycles, we are going to undertake the evaluation of estimation of working capital, basically. Okay, so when we are going to estimate the working capital, first part that we are going to look at is working capital cycle, or what we call as the cash cycle also, maybe for that, right? So operating cycle. So we're talking of operating cycle. So operating cycle is basically the time period, time taken for converting cash back into cash in the business. Right now, what do we really mean by converting cash back into cash into the business? Because when we're talking of operating cycle, think from the point of view of the working capital aspect. So from the working capital aspect, you can see that once you have initially the cash balance, okay, so if you're having the cash balance with you, then of course you will utilize that cash to purchase raw material, right? So basically your cash gets converted to raw material, right? So cash gets converted to raw material because you pay the cash to get the raw material. Further, that raw material is converted to work in progress, right? So cash, we get converted cash to raw material, and from raw material to work in progress, and then that work in progress is further converted to finished goods. right? So that is further converted to finished goods. And then finally, when I sell those finished goods, they get converted to debtors. And then finally, we receive the money from debtors, right? So initially, when we have cash, we purchase material with the cash. Then that raw material is put into the process to get it converted to work in progress. And work in progress takes the form of finished goods. From finished goods, it goes for debtors. And then finally, when you collect the money, it comes back as cash. So this particular cycle of cash again to cash is something that we are talking of as the operating cycle. This is what we simply mean by the operating cycle. Okay. So this is how we simply undertake the operating cycle, or time taken for the cash to get converted to cash again. That's called as operating cycle. So now, what are the components that we have in this operating cycle? So first component is raw material holding period, right? So first component is raw material holding period. So let us say you take certain number of days to keep the raw material with you. So it's not that raw material, the cash which you use to get the raw material, that raw material is not totally getting converted to WIP in one shot. It takes some time for raw material to get converted, right? So raw material holding period is, let's say, 20 days. So you're taking 20 days for one lot of raw material to get used and getting converted to finish to, get fully converted to WIP, right? So basically whatever cash you're spending on acquiring the raw material, that remains as raw material with you as for 20 days, right? Then it goes for the WIP, right? So WIP conversion period. Basically, we are looking at what is the time that you take to convert raw material to finished goods, right? So the time lag between raw material nature to finished good nature, that's your WIP conversion period. So let us say you're taking 10 days for WIP conversion. Then after that, you have finished goods. So you receive the finished goods holding period. So you took 30 days for cash to till you reach the work in progress time. After that, it's going to be finished goods. Now that finished goods is going to be there in store for certain number of days. So finished goods is going to be there finished goods is going to be there for, let's say, with you in your godown, in your store, let's say for 30 days. So the raw material which was converted to finished goods, that's going to be there as finished goods for 30 days. And then it is going to be sold to the customer. Now, customer is also going to take certain time to give you back the money. So this is your debtors collection period. So debtors collection period. So debtors collection period is, let's say, 25 days. So you take 25 days to collect money from your debtors, right? So debtors collection period is basically 25 days. So if I just add all of them, that's 85 days, right? So this is like you started with day 0. You reached the raw material stage on day 20, right? So this is like over here, this is day 0. Then raw material was kept till 20th day. WIP was there till 30th day, right? And then finished goods were kept for another 30 days. So this was till day 60. And it was with the debtors till day 85. Right? So you started with this. So for 20 days, it was in the raw material. For another 10 days, it was in the WIP. For another 30 days, it was as finished goods. And then finally on 85th day, you're getting the money collected from the debtors, right? So this particular time period is what we mean by the operating cycle, right? So you put your money on day 0 and you receive back the money that you invested on day 85, right? This is your operating cycle. Now the point is, so sir, we can simply understand it in this pattern also, that second. So this is like day 0 where you have cash. Then it goes on for 20 days, right? So this remains as raw material, right? So you have raw material nature. Cash gets converted to raw material. It remains as raw material by day 20. And then day 10, or sorry, day 30, right? It remains as WIP, right? Because for 10 days it is remaining as WIP. Then after 30, then it's going to be for another 30 days. So basically this is your day 60. So by day 60, the nature is that you are having finished goods. And then from day 60 till day 85, you have debtors. So cash to raw material to WIP to finished goods. And then finally to the debtors, we have the 25 days gap that is coming out to be debtor value, right? So you can say from cash to final value, it takes total 85 days. But here we are assuming that we are purchasing the goods on cash basis. Now, what if I tell you that you are purchasing the goods on credit? What if I tell you that the goods are being purchased on a credit, and the creditor is giving you a credit period of, let's say, 15 days. So in that case, can I say your cycle will actually start from day 15 onwards? Because here is what you're going to make the payment as cash, and you will realize the cash on day 85. So essentially, what is the time period for which your money is blocked? Your money is not blocked now for full 85 days, right? So money is not blocked for fully 85 days now. In fact, your money is blocked for 70 days only. So your money is going to be blocked for 70 days only. So this is what we have computed as 85 days. This is called as a gross operating cycle. Right. So gross operating cycle is 85 days. And then from that, we are going to subtract from the gross operating cycle, we are going to subtract the creditors payment period. Creditors payment period was 15 days. Right. So net operating cycle finally can be computed as the difference between these two, which is 85 minus 15, or we can say 70 days. So net operating cycle is going to be 70 days. Right? So gross operating cycle 85 days, net operating cycle is 70 days. So for us, net operating cycle is what we the net figure that we are talking about. Okay, so operating cycle is computed in this particular pattern, where you have the raw material holding period plus WIP conversion period plus finished goods plus debtors collection minus creditors period. So we can say the final formula for operating cycle is raw material holding period plus WIP conversion period plus finished goods holding period plus debtors collection period minus creditors payment period. Okay. Okay. Fine. Now the point is, how do we really compute? We would really like to know, how do we really compute this raw material holding period or WIP conversion period or finished goods? Right? There needs to be some formula, some sort of logical number we should have, which will help us to calculate these things. Right? So let us try to look at the formula for these individual items. Okay. So first is raw material holding period. How do we calculate the raw material holding period or raw material storage period? Let's understand it with the help of an example. Suppose you have in one box 150 chocolates. It's in one box you have, let's say, 150 chocolates, and daily consumption every day, your family members are eating, let's say, 5 chocolates. Okay, so there is a stock of 150 chocolates, and on a daily basis your family is consuming, or you are consuming, let's say, 5 chocolates. So can you tell me in how many days, right? In how many days is the stock of these chocolates going to get completely finished? In how many days is it going to get finished? Yeah, 30 days. Can you simply did 150 by 5, which is nothing but 30 days. 150 by 5, which is 30 days, right, guys? So 150 by 5, it is simply 30 days, right? So raw material holding period is, the days required to consume this full is 30 days. Now, how did you get this 30 days? You get this 30 days simply by dividing this 150 with 5. What was this 150? What was this 150? This 150 was basically stock of raw material, right? So raw material holding period is also going to be computed in a similar way. It's going to be average stock of raw material upon average daily raw material consumption. So average stock of raw material upon average daily raw material consumption. Average stock of raw material upon average daily raw material consumption, right? So that's what we did, right? 150 divided by 5. That's a simple formula, right? Same way, if I want to compute the formula for WIP holding period, which is work in progress holding period or conversion period, then we say that this is simply going to be average WIP stock upon average cost of production or average daily cost of production. Average daily cost of production. Okay, so that's the WIP holding period. Then finished goods holding period. Finished goods holding period, we can simply compute this as average finished goods stock upon average cost of goods sold per day, right? Same way, if I want to compute the receivables collection period, receivables collection period is simply going to be, this receivables collection period will be average receivables upon average credit sales. Right? Receivables collection period is average receivables upon average credit sales again per day. Right? So if I want to say creditors payment period, can anyone tell me what will be the formula for this on a similar lines? Creditors payment period. Just like we have the receivables collection period, same way. What will be the average creditors payment period? What do you think? What will be the formula for creditors payment period? Hence, it will be average payables upon average credit purchase per day. Right? So average credit purchases per day. Now we have a lot of per day sort of thing over here. Now, if we want to simply talk of making it a bit more easier, because we may not be having data about every time per day what is our consumption or per day what is the other numbers. Right? We may not have such numbers easily on a per day basis. So if I want to make it annual, can I just revise this formula as annual raw material consumption divided by 365, right? We can do it, right? It's like average stock of raw material upon annual raw material consumption divided by 365. And further, this divided by 365, I can just do the reciprocal and say that this is just multiplied by 365. So average stock of raw material upon average raw material consumption into 365. Annual raw material consumption into 365. So if you are taking the annual figure, it's going to be multiplied by 365. Same way over here also, we can say this as annual daily cost of production into 365. Then finished goods holding period is again going to be annual COGS multiplied by same 365. All our formulae, instead of taking figures on a per annum basis, we can simply take the per day basis, we can take the annual figure, and in the numerator we can multiply with 365. Right? So this is annual credit purchases into 365. Right? So average stock of raw material, average WIP stock, everywhere we're going to take the average numbers. But in the denominator, instead of taking per day figures, we would like to take annual figures and then simply multiply by the 365 numbers. Okay. Now let me just give you some numbers for practice, and then we will try to calculate these all numbers on your own, and then we'll verify it. Okay. So the numbers are like let us say annual raw material, or let me prepare an income statement or a cost structure for you so that you'll be able to apply this formula. So I'm just writing the question over here in this portion, and you should be able to find the answer for it. Okay, so we have opening raw material stock. Okay, let's say 50,000. Add purchases of 1,20,000. No, sorry, make it as 12 lakh. Less closing finished goods stock of let's say minus 60,000. So we get opening raw material stock, add purchases, less closing finished good stock. So what do we call this number as? Opening raw material stock plus purchases less closing finished goods. Sorry, my bad. Closing raw material stock. This particular number is indicating raw material stock, add purchases, less closing. Opening WIP, and we will subtract, let's say, the closing WIP. Right? Or let me just take it like this. Second. There was some technical error. I think screen sharing has stopped. One second. Let me just share it again. Okay. So we have the closing raw material stock, and we got the raw material consumption. Now, the next aspect is to adjust for the WIP and the production cost. So, of course, to that we are going to add production expenses. Right. So, suppose we have opening WIP of 65,000, production expenses of, let's say, 4 lakh, and closing WIP is 80,000. Right. So when we do these calculations, then what we get over here is this particular number is the cost of production. Right. This is our cost of production. So cost of this is cost of production. Okay. Now to that you add opening finished goods stock, and from that you reduce closing finished goods stock. So opening finished goods stock less closing finished goods stock. So opening finished goods stock will be based on the historical figures. Let's say opening stock was 1 lakh and closing finished goods stock is 1,20,000. So this is what we mean by COGS. Okay, so cost of production plus the finished goods stock and less the closing finished goods stock. That will give us this particular number. Right, so COGS is 15,55,000. That's your COGS. Now, of course, on this COGS, you will add the gross profit, which will give you the value of sales. So on COGS, you add gross profit. That is going to give you the value of sales, right? So let us say the gross profit is 3,45,000. So sales will come out to be 19. So this is your typical income statement that we have, right? So this is a typical income statement that we have. From this, you can obviously get the average stock of raw material, which is opening plus closing divided by 2. Average WIP, which is again opening plus closing divided by 2. Average finished goods, which is based on opening plus closing divided by 2. average receivables and average payables is something which I'm going to provide you. So let's say average receivables. Okay, by the way, you are assuming that everything is on credit, huh? The sale as well as the purchases, both of them, we are assuming that they are fully on credit. So purchases are on credit and sales are also on credit. Average receivables, uh, average receivables is going to be, let us say, 3,20,000, and I say that average payables, or we can say average creditors to be specific, average creditors is 2,40,000. Now, based on this, right, all these are annual figures. Yes, all this income statement is fully for the is for a fully annual figure, and these are annual average. Okay. Now, based on this, can you compute these 5 items, guys? Can you compute the raw material holding period, WIP holding period, finished goods holding period, receivables collection, and creditors payment? Can we do that? Can you do that, guys? Yes. Yes. Try it out, guys. Give me these 5 figures. You just have to just substitute over here. Wherever it is average, it's going to be opening plus closing divided by 2. Right. So try to solve it quickly. Try to calculate these numbers. I mean, operating cycle figures. So let me just give you something on a timer basis so that I think for computing this, 5 minutes is okay, sufficient enough. I think the screen sharing just stopped. Let me share it again. Yeah. So here we go. With the timer on, quickly get the answers. Assume 365 days. Yes. Assume 365 days. It may be in decimals. That's okay. Okay, so time is up. So did we get the answers? Home to send message. You're sending message here also. Okay. Just send me for the video, wala thing. Whoever is sharing the video, just share your message to CA Japan. Okay. The other is just for sharing the screen because it helps me to easily manage the devices. Okay, so we got the numbers. Okay, perfect. Let me just uh, simply compute these numbers for us. Okay, raw material holding period. Okay, raw material holding period is going to be yeah. So raw material consumption, which is this. Sorry, stock of raw material. So average stock of raw material will be opening plus closing divided by 2. So this is your average stock of raw material. Raw material consumption is this number, and of course you multiply it by 365. So that gives us a raw material holding period of 55,000 divided by this multiplied by 365. Right, 16.86. So we call it as 17 days. Okay, so answer we take it as 17 days because we are generally going to round it. Okay, so that's like what? Okay, round it to the upside. Always, whenever we're talking of days, it will be always rounded to the upside. Okay, then WIP holding period will be average of WIP stock, which is 65, and this particular number. So average is 72,500, and we take this as annual cost of production. So cost of production is this, and then we multiply it by 365. So this is 72,500 divided by 1575 into 365. So 16.89. Again, we round it up to 17 days. Right, guys? Got this number? 17 days. Finished goods holding period is going to be again average of opening and closing. So 1,10,000 divided by COGS. So we multiplied by 365, and therefore we say it's 1,10,000 divided by 15,55 into 365. 25.81, or we call it as 26 days. Okay. Receivables collection period. Receivables collection is going to be average receivables, which is 3,20,000 upon sales of 19. So here we have this number to be 62 days, right? And then finally creditors payment period. So for creditors payment period, we have the average creditors upon average credit sales or credit purchases, which will be this number, and then again into 365. So this is 73 days, right? So we got all of them. So over here, if I ask you, what is my operating cycle? How do we get the operating cycle? Yep. What is the operating cycle? Of course, raw material holding period plus WIP conversion period plus finished goods holding period plus debtors collection period minus creditors payment period. So that's going to be like 17 plus 17 plus 26 plus 62 minus 73. So that is 49 days. Right? Did we got this? Operating cycle, everyone? Yes. Did we get the operating cycle? Are we clear how to compute the individual components of operating cycle? Yes. Okay. Perfect. So that's the computation of operating cycle. Now the next is to compute the amount of working capital. So to compute the amount of working capital, it is very simple because we just are going to rearrange this formula. So let me just write down this formula, and we will compute each one of these items using just a derived form of this. So see, raw material holding period is average stock of raw material upon annual raw material consumption into 365. So this simply implies if I want the average stock of raw material, how do we compute that? How to compute the raw material holding period? I did it over here, right? Raw material holding period was stock of raw material upon the raw material consumption into 365. Okay. So if I just rearrange this and I ask you, what should be the average stock of raw material? How do you calculate that? How do you calculate the average stock of raw material? So average stock of raw material will be, you can just take this on the other side and rearrange it. Average stock of raw material will be equal to how much, guys? Can you just rearrange that term? So if you want average stock of raw material, of course, the annual raw material consumption will go over there. So we can say annual raw material consumption multiplied by raw material holding period divided by 365. Right? So that's how you compute the average stock of raw material. Then second part, how do we compute now the average stock of WIP? Of course, this is going to be annual cost of production into WIP conversion period divided by 365. Right? But one thing to note over here is, your cost of production will be, you're going to take 100% raw material, 50% labor and overheads. So cost of production will be, you'll be taking 100% raw material, 50% labor and overheads. Okay. So our cost of production is going to be 100% in raw material, 50% labor and overheads. So we are going to take the conversion cost to be just 50%. You're going to take the conversion cost to be 50%, because the idea is when you're going for production, raw material is immediately utilized, but the labor overheads, they work on it day after the day. So it takes time for the raw material to get converted to finished goods. During that phase, it remains in the WIP phase, and when you are in that WIP phase, during that WIP phase, some part of labor and some part of overheads is only there. So you just need to remember this in mind, that this particular cost of production will be 50% of labor and overheads, or whatever the question specifies. Okay, so this is average now stock of finished goods. We can get the average stock of finished goods as what? Annual COGS multiplied by annual COGS multiplied by finished goods holding period divided by 365, or you can also say this to be annual cost of production into finished goods holding period divided by 365. But remember, over here, your cost of production is going to be, over here, the cost of production is going to be 100% raw material and 100% labor and overheads. So here the cost of production is going to be both 100%. Raw material as well as labor and overheads, both of them are going to be 100%. Okay. Fine. Then receivables collection period. We have average receivables upon annual credit sales into 365. So from this, if I want to compute the average receivables, so average receivables will be annual credit sales multiplied by debtors collection period by 365, right? And similarly, the average creditors will be annual credit purchases multiplied by creditors payment period divided by 365, right? Okay, so there's a difference in cost of production for WIP and cost of production for the finished goods. In finished goods, we are taking full cost of production, which is 100% of raw material and 100% of labor. Okay, so sometimes we may also be using this cost of production, because whatever you are producing, that is what is going to be stored in your godown or in your location. So out of whatever you are producing, that is only going to be sold. So if you don't have, if we are given information about cost of production, we can use it. And generally your cost of production and cost of goods sold is going to be same if your opening and closing items are equal. Like opening stock of finished goods, opening and closing stock of finished goods are same, then your cost of production and COGS is also going to be equal. Otherwise, there will be difference between them. Okay, so based on what the question is demanding, we'll be using the typical appropriate formula for this. Okay, so someone is asking, what is the meaning of labor and overheads cost accruing evenly during the year? Okay, during the year, evenly accruing, it simply means that cost of production, whenever there is a conversion cost like labor and overheads, you're assuming that they are going to be applied in the production on a regular basis, one after the other. They're going to be applied in the production on a regular basis, one after the other. So it'll be like you are, it's not that all your labor and overheads are accruing one in a typical month, and next month you don't have any labor and overhead. It's not like that. Every day there is an equal amount of labor and overheads getting used, and that's what we mean by accruing evenly throughout the year. I hope it is clear. Yeah. Yes. Okay. So these are the formula that we have for average stock. One second, guys. Okay. So now the next aspect is yeah. Let's do one question based on this formula. Let me give you a question. Just give me a moment. Let me just open a file for you so that we can do a question based on that. Yeah. Okay, so here we have this typical question for us to calculate the workings. So let's say on 1st January, the managing director of A Limited wishes to know the amount of working capital it will be required, okay, for the working capital forecast. So production during the year, they're saying it's 60,000 units. It is planned that this level of activity be maintained during the present year. So in the current year, we are expected to have this same level of activity, which is 60,000 units. It is planned that this level of activity should be maintained during the present year. The expected ratios of the cost to selling prices are raw material 60%, direct wages 10%, overheads 20%. Raw materials are expected to remain in store for an average of 2 months before issue to production. So from this, let's prepare first an income statement. Okay, let's prepare an income statement from this, and then we'll go for the working capital estimate. So, or cost structure, we can say cost structure. So cost structure wise, we are selling like 60,000 units. So units are 60,000. It is planned that this level of activity will be maintained during the present year. The expected ratios of cost to selling prices are raw material 60%, direct wages 10, overheads 20. And each unit selling price is given in the question to be 5. Okay. And then we have certain months and all is given. But let's prepare the cost structure to be specifically about raw material. Then we have direct wages Then we have overheads, right? And these percentages are already given to us. So percentages are like 60%. This is 10%. Overheads are 20%. So based on this percentage, now we have the per unit, and then we'll of course take the amount. So per unit is raw material 60%. Per unit were the selling price which we had. So totaling, this was 90%, and of course we had the profit maybe of 10%. And so we have the sales figure as 100%. So per unit, sale price is 5 rupees. So this is going to be 0.5. Right. Then the total, of course, this is going to be, now raw material is going to be 60%, so which is 3 rupees. Wages is 50.5. Overheads is 1 rupee. And your total cost works to be 4.5. Okay. Now, amount wise, the total raw material that we have is 3 rupees into 60,000. Now, this is going to be, this 1,80,000 is going to be, remember, raw material consumption. Okay, so this is going to be the raw material consumption. Okay, now using this raw material consumption and all, we are going to prepare the forecast of working capital. Now, for forecast of working capital, we also need the operating cycle numbers. Operating cycle numbers. So in this operating cycle numbers, we are going to be like working for, in the operating cycle numbers, will be like, what is the raw material holding period? What is the WIP conversion period? Right? What is the finished goods holding period? Right? We will need the debtors collection period, creditors payment period. Let's try to identify each one of them. So expected ratios are taken. Materials are expected to be remaining in store for an average of 2 months before issue to production. So what is this 2 months, guys? What is this number 2 months? Materials are expected to remain in store for 2 months before issue to production. This is of course raw material holding period. Right? This is raw material holding period. Then WIP conversion period. Uh, 2 months before issue to the production. Each unit is expected to be in process for 1 month. Expected to be in process for 1 month. So that's your WIP. Finished goods will stay in warehouse awaiting dispatch to customers for nearly 3 months. So finished goods is going to be 3 months. Then credit allowed by creditors is 2 months. So this is going to be creditors payment period, which is 2 months. Then credit allowed by creditors is 2 months of the date of delivery. Credit allowed to debtors. Debtors, we are allowing credit to debtors of 3 months. Okay. Selling price wise, there is a regular production and sales cycle. Wages and overheads are paid first of each month for the previous month. So is there going to be any outstanding amount of wages and overheads? Yes. So outstanding wages and outstanding overheads. Outstanding wages and outstanding overheads are at a 1 month time lag. Right. So they are outstanding in a time lag of a month. Right. So this is outstanding wages, outstanding overheads. a time lag of 1 month. Okay, so this is the entire thing available. Apart from that, we have a cash balance and a safety margin of 10% to be done. Now, using these numbers, we are going to fully forecast the amount of working capital that we are looking for in the next year. So we'll say, let's calculate statement of working capital estimate. So this is going to be a statement of working capital estimate. So we'll say current assets. Now in that current assets, first one that we will have is raw material stock. Current assets that we have is raw material stock. Then to that, you add the WIP stock. Then we have finished goods stock. Then we have debtors. We'll also have the cash balance, right, which will give us total current assets. Okay, so let's do it one by one. A raw material stock, or what we call as a stock of raw material, that is simply going to be computed. The stock of raw material, we can compute it as, this 1,80,000 is a total raw material consumption. So this multiplied by 2 months, so into 2 by 12. So 1,80,000 into 2 by 12. That's going to be 30,000 raw material stock. Okay. When we are doing this WIP stock, okay, let me just check. Can you calculate the WIP stock now? Compute the amount of WIP stock. Let me see how many of you can get it correct. Give me the WIP stock number. Give me the stock of WIP number, guys. Yes. Calculate the WIP stock and let me know. $18,750. Okay. Well, we take the cost of production, but you need to remember, we don't take the full cost of production. We take only 50% of it. So this is going to be 30,000 into 50% plus 60,000 into 50%. And this entire thing will be multiplied by 1 by 12. Right? So this is going to be 18,000 plus 15,000 plus 30,000 multiplied by 1 by 12, which is 5,200 and 1 second. Yeah, there's a mistake, or 18,000, 1,80,000. Yeah, so that's going to be 18,750. Perfect, guys. Because we remember that we need to take the conversion cost to be 50%. Now, finished goods stock can be computed as this sales figure. No, we have to take the cost of production, 100% cost of production, which is 2,70,000 into 3 by 12. So that's going to be 2,70,000 into 3 by 12, which is 67,500. Debtors is the sales figure, which is 3 lakh multiplied by debtors collection period is 3 months. So 3 by 12. 3 by 12. Then the cash balance is given to be 20,000. So cash is given as 20,000 in the question. Right, guys? Then we take a sum of all of them. This to be total current assets. So these are gross current assets. Check debtors. Some problem? Yeah, zero problem. Yes. Now is it okay? Is it okay now, guys? Debtors. Yes. Okay. Now from this we are going to subtract the creditors value. Right? So we're going to subtract the creditors value. So less current liabilities. So in the current liabilities, we are going to first subtract creditors. Now for creditors, we need the raw material purchases. What is the amount of raw material purchase over here? What is the amount of raw material purchase? What's the amount of raw material purchases, guys? What's the amount of raw material purchase? Well, we will take this raw material consumption to be purchase itself, because we know that raw material consumption is opening stock of raw material plus raw material purchases minus closing stock. So if you assume that both opening stock and closing stock of raw material are one and the same, then of course the consumption and purchases both are going to be similar, right? So that's the assumption we are taking. So here we can say it's 1,80,000 into creditors payment period is 2 by 12 into 2 by 12. So that's 1,80,000 into 2 by 12, which is 30,000 creditors. Then we are also going to have some sort of other current liabilities, which will be outstanding wages and outstanding overheads. So outstanding wages will be like wages are 30,000. So this 30,000 multiplied by 1 by 12, because wages are outstanding for a month. So for 1 month, we have an outstanding figure. So this is simply 30,000 divided by 12, which is 2,500. Overheads are 60,000. 60,000 into 1 by 12, which is 5,000. So then we have the net working capital. So net working capital will be total current assets minus sum of these, which is 1,73,750. Right? This is the net working capital. But remember, this was without margin. Now to that, we need to add a margin. As stated in the question, it says you have to take a safety margin of 10%. So let us add a margin. Let's add a safety margin, which is, of course, at the rate of 10%. So on this, you multiply 10%. And then we have the net working capital. Right. So final net working capital will be just addition of these two, which is 1,91,000. Right. 1,91,025. Okay. This is with a margin, right? Okay. One important point that we need to remember is here we are calculating the debtors on sale value. But in ICAI questions, you will find that you are going to value debtors at cost. Because see, you're making a sale right? They're making a sale on 100% basis. So this is like, it includes a profit margin of 30,000. So that profit margin of 30,000 will be your profit only if you are realizing it, right? This will be your profit only if you are going to realize it. So therefore, most of the times we calculate the debtors at cost. And due to that, the value of debtors is going to be a bit different. Instead of taking the full sale value, we'll take the cost of sales. So 2,70,000 into 3 by 12. The debtors is going to be 2,70,000 into 3 by 12. So alternatively, you can take debtor value as 67,500. In fact, we have to take the debtors always at cost. So take a note of it. We're always going to take the debtors at cost, which is taking the cost of sales. Just add all the cost together and then you multiply it with the time period instead of taking the sales figure. Okay, so this stands as 67,500. Okay, now Sukaina is asking, sometimes in book they take raw material in WIP and also in some net. Raw material will be there in WIP. Unless the question says that, raw material is happening at some other time or something else. Otherwise, we can say definitely that debtors are going to be at cost. I mean, you're going to consider the raw material as 100% in your WIP calculation. Okay, so debtors, remember, we have to value it at cost. If the question says that value it at sales, then you take it. Otherwise, by default, it has to be at cost. Is this clear, everyone? Is this question clear to everyone? Not the question, but the solution rather. Yes, are we good, everyone? Okay, then in that case, let's just take a break, guys, in between. So let's take a break now, some 10 minutes break, and then after that, we'll continue with some more questions on estimation of working capital. Okay, let's take a break, guys. We're back, guys. Yeah, so we continued with the working capital chapter with one of the questions where we computed the net working capital requirement. Now, let me just do one thing. Let's take few questions for practice, for revising these aspects. Let me just come up with the next question. Let me just look at some question from past exam paper, right? So that we have a good variety. Look at some RTP question, maybe. Yeah, so let us take this RTP question for our calculation. Is a question from September 24 RTP. So I was asking if question does not specify 50% conversion, still do I need to take only when it specifies? 50% conversion cost is a by default assumption. If the question gives you any other percentage, then you can use it. Okay. Let's look at this question number 10, guys, from the September 24 RTP. So TMT Limited is commencing a new project for manufacture of electric toys. The following cost information has been ascertained for annual production of 60,000 units at full capacity. So we're going to produce 60,000 units. Okay. Now, from this 60,000 units, we are having the information regarding raw material, right? Then we have labor, manufacturing overheads. Take a note of it that it has got two components, the variable and the fixed. Right. So variable and the fixed we have. Yeah, and same way, sales and distribution overheads has got the variable and fixed overhead, profit, and then the selling price. Now they say in the first year of operation, the expected production and sales are. So in the first year of operation, we are likely to get sales and production of 10,000, out of which 35,000 is what we are going to sell. To assess the need of working capital, the following information is available. So stock of raw material is 3 months consumption. Credit allowable for debtors is 1.5 months. Credit allowable by creditors is 4 months. And then we have lag in payment of wages of 1 month, lag in payment of overheads half month. Cash in hand and bank is expected to be 60,000. Provision for contingencies is required at 10% of working capital requirement, including the provision. You have to prepare a projected statement of working capital for the first year of operation. And the question clearly says now, debtors are to be taken at cost. Okay. So again, the procedure remains the same. We need to first prepare the cost statement, and then we'll go for the estimation of working capital. Okay. One second. Yeah. So let's prepare the cost statement. So the cost statement, where is it? Excel. Yeah. So this is, remember, RTP September 2024. Question number 10. Okay. So first we are going to prepare the cost statement based on the information given in the question. So level of units that we are going to sell, I mean, not the level, but the quantity of units that we are going to sell. Annual production capacity is 60,000. So we know that our production capacity is 60,000 units. But how much are we going to produce? So our production is 40,000 units. Okay. And sales is going to be 35,000 units. Okay, production capacity 60,000 units. Production units are basically 40,000 units, and sales is 35,000 units. Okay, these are the units that we have. Now we do have the information about everything. This cost structure is there, and I mean per unit amount are there, and the units level are there. You have to first prepare the cost structure. Would you like to prepare the cost structure on your own? Would you like to try it, guys? Would you like to prepare the cost structure on your own? Or you want me to do it? You'll do it? Okay, great. So this is a revisionary session. I want you to take the lead. Prepare the cost structure. Prepare the cost structure. So it's going to be the same way. Material consumption, then labor, manufacturing overheads. That gives you the cost of production. And then from that, you're going to subtract the closing stock. That'll give you COGS, and then admin and overheads. So let me give you a format, and then based on that format, you can start working out. So first we will have the raw material consumption, right? So raw material consumption, you will add to it labor, and add to it manufacturing overheads, right? In manufacturing overheads, you will have both components. One is the variable and other is the fixed, right? So that will give you cost of production, right? Then you will say add opening finished goods less closing finished goods. That will give you COGS, right? To that, you're going to add selling and admin expenses. Again, selling and admin expenses are going to be two component, variable and fixed, right? So that will give you cost of sales, right? Write down the sales, or you can say add to it profit, which will give you the figure of sales. Okay, so this is going to be the typical format which we have. So you will have raw material consumption here. We'll add labor. Now regarding the manufacturing overheads, you'll have it over here. The total will come over here. So this is the cost of production. opening finished good stock less closing finished good stock will give you the COGS figure, right? Then again, you will say variable selling and admin, fixed selling and admin. And then you have the cost of sales. You add profit to it. And then the sales, right? So that's your typical cost structure which you're supposed to be preparing, right? So first take it down in your books, guys. Take down this format, and then you just have to fill it up using the data. Or I'll do one thing, wait. I'll just bring this question to our calculation part. Yeah, this is the question. Let me just take this question to you. Okay, the second part of the question is this. Okay, so here is the question as well as the format of cost structure. So try to have this cost structure ready with you guys. Prepare this cost structure. Try to prepare this cost structure. So you may take for this cost structure. Yeah, this is the time which I can allow you. So here we have the timer and the cost structure format with the relevant data on the screen. Try to prepare this cost structure. After that, we will go for estimation of working capital. In case of fixed overheads, number of units will be what? Because this is at capacity, so at full capacity you have to take the full capacity value. Okay, so it's time up. Let me just start with the cost structure. Okay, so material consumption, raw material consumption. I'll just remove this process from here. Yeah, raw material consumption will be 20 multiplied by 40,000. So raw material consumption is going to be 20 multiplied by 40,000, which is 8 lakh. Okay. To that, we are going to add labor. Of course, labor will be 15 multiplied by 40,000. 40,000 into 15. Manufacturing overheads, we can say variable, it is 15. So variable overhead 15 multiplied by whatever you're producing, that is going to be only applicable. So into 40,000. 15 into 40,000. Fixed manufacturing overheads is 10. But remember, this 10 will be multiplied by 60,000. This is going to be multiplied by 60,000 days. Why 60,000? Because when you have budgeted this at 60,000, fixed overheads, the units that have been computed 10 is by using the simple calculation of total your cost divided by the number of units estimated to be produced. Now over here, the number of units that are estimated to be produced is 60. Now if you're producing just 40, that doesn't mean that fixed overhead will be applicable to you at the rate of 40. You will have to pay the expenses at 60,000. So that's going to be 10 multiplied by 60,000. That's going to be the fixed overhead. So our cost of production will be 26 lakh. Opening finished goods, opening stock of finished goods will be obviously 0 since this is a new company. And closing stock of finished goods will be, so we created goods worth 26 lakh for 40,000 units, right? And we have like, this is 26 lakh divided by 40,000, and we just multiply it with 26 lakh divided by 40. We multiply it with the stock of 5,000 because 40,000 units is produced, 35,000 is sold. So we are having like 5,000 units in the stock. So this is going to be this divided by 40 into 5, which is 3,25,000. So we get the cost of goods sold as cost of production plus opening finished goods minus closing finished goods, which is 22,75,000. Same way, variable selling and distribution overheads, it's going to be 3 multiplied by units that we are selling, which is 35,000. So 3 multiplied by 35,000, and fixed is 1 multiplied by, this is going to be 1 multiplied by, because we are 60,000, but wait, selling and admin, it's going to be obviously 3 multiplied by 35, sorry, because 35,000 are getting sold, so we just took it as 35,000. And fixed overheads 1, that will be multiplied by 60, because when you had budgeted it, that was a total of 60,000. Now if you're going to produce or sell less, that doesn't mean your fixed cost is also going to be lesser. So we have the cost of sales as 24,40,000, and the sales figure is going to be 80 rupees into 35,000. So it is 80 into 35,000, which is 28 lakh. And obviously the profit is just the difference between them, which is 3 lakh 60,000. Did we get this cost structure, everyone? Did we get the cost structure? Profit per unit is given, but that is given as per the 60,000 units capacity. Here we don't have that 60,000 units capacity. We are producing 40 and selling 35. So my profit per unit is not going to match with this profit per unit. Yeah. Are we getting it? Everyone? Which one? Sukana? Profit per unit cannot be taken because now your variable cost is not same as the previous case, because earlier you have a fixed cost of 1 rupee per unit, right? Now, if you take this fixed as 60,000 and you take a per unit of that, that will be 60,000 divided by 40,000. Right? That is 60,000 divided by 40,000. So now your fixed cost on a per unit basis has changed. So if you really want to see what is a per unit number, just try to get the per unit number as per the new income statement. So get the per unit number as per new income statement. So this divided by 40,000. This is your per unit numbers. These are your per unit numbers. Right. So your COGS into this divided by 35,000. Your per unit numbers are this now. It's going to be divided by 35,000. Same applies over here. Same applies over here. And again over here it will be 3,60,000 divided by 35,000 because you're selling 35,000. So per unit figures are changing due to not being at the 60,000 units level. Very clear? Okay, so I hope cost structure is clear with everyone. Cost structure is ready with everyone. Yes. Now, can you compute the estimation of working capital? Can you carry out the estimation of working capital now? Yes or no, guys? Yes? Sure. Go ahead with it. Please estimate the working capital. The same technique which we have used for the previous question. Estimate the working capital, guys. You have the operating cycles given over here. Okay. Now, again for that, I'll give you around this same timing. Estimate the working capital. Okay. So let's go ahead. So first we need to compute the stock of raw material. Stock of raw material. Stock of raw material, of course, based on raw material consumption. So we got the raw material consumption to be 8 lakh, right? So that's going to be 8 lakh multiplied by stock of raw material is 3 months consumption. So 3 by 12. So the answer is 8 lakh into 3 by 12, which is 2 lakh, right? Then there's no WIP as such. Is there WIP in the question? No, there's no WIP, right? But then yes, we'll have the stock of finished goods. Stock of finished goods will be this figure, 3,25,000. Right, so this is 3,25,000 stock of finished goods. Then we have the value of debtors. So the value of debtors, credit allowable for debtors is 1.5 months. So for debtors, we are going to value at cost. So at cost means, of course, cost of sales. So the debtors calculation will be 24,40,000 into 1.5 by 12. So 24,40,000 into 1.5 by 12, which is 3,05,000 debtors at cost. And then we have the cash and bank balance. That is given in the question to be 60,000. So cash in hand and in bank is 60,000. Then, so total of current assets will work out to be 8,90,000. From that, we are going to reduce the current liabilities. Now, in current liabilities, of course, these were all set of current assets. Now, in current liabilities, we are going to have creditors. So credit allowable creditors is 4 months. So credit allowable creditors is 4 months. So how can we calculate the creditors? Can I use this cost of production, sorry, raw material consumption as the raw material purchases? Can we assume raw material consumption is same as raw material purchases? Yes or no? Can we assume raw material consumption to be raw material purchases? No, we can't use that. Because this is a new company and this is obviously we are going to have a closing stock of raw material. See, this particular number, stock of raw material, that's a closing stock of raw material. So we need to compute the raw material purchases. Raw material purchases needs to be computed. How do we get the raw material purchases from the consumption and opening and closing stock? What would be the formula? We know raw material consumption is opening plus raw material purchases minus closing. So raw material purchases will be raw material consumption minus opening plus closing. So raw material consumption is 2 lakh minus opening is 0, but we are having a closing, sorry, raw material consumption was 8 lakh, yeah. 8 lakh minus opening of 0 and plus closing of 2 lakh. So this is 2 lakh plus 8 lakh. So that is 10 lakh of raw material purchases, right? Did we get this? raw material purchases. $10 lakh. So now my calculation will be based on this 10 lakh. So 10 lakh into credit allowed by creditors is 4 months. So 4 by 12. So that's going to be like 10 lakh into 4 by 12. So 3,33,333. After that, we have creditors for material. Then we have creditors for expenses. So creditors for expenses will include, of course, the whole lot of other expenses. So will be like outstanding wages. Then we'll have outstanding overheads, right? Yeah, outstanding wages and outstanding overheads. So outstanding, when we say wages, that is going to be 6 lakh. So 6 lakh is going to be outstanding for 1 month. So that's simply going to be 6 lakh divided by 1 by 12, or 6 lakh into 1 by 12. 6 lakh into 1 by 12. This is 50,000. Outstanding overheads. Outstanding overheads, which is manufacturing as well as selling, both of them overheads are outstanding for half a month. So if it is for half a month, we'll say it is 6 lakh of variable manufacturing and fixed manufacturing 6 lakh, so it's 12 lakh. 12 lakh plus this 1 lakh 65, the total 13 lakh 65,000 into 1 by 12. So that's 13 lakh 65,000 divided by 12, which is 1 lakh 13,750. Oh, not sorry, 1 by 12. It's 0.5 by 12, right? Because the question says it's half a month. Into 0.5 by 12. So 56,875. Right? And then we take a total of current liability to be 4,40,208. And then finally, we will say net working capital before contingencies. So net working capital before contingencies is 4,49,792. And then we add to that the contingency or provision for contingencies required at 10% of working capital. So this is provision for contingencies, which is this into 10%. And then we have the net working capital after contingencies have been provided for. So after provision of contingencies, the net working capital that we should have is 4,94,771. Is it? Or there is some other language? Overheads are 12 lakh. No. This is manufacturing overheads is 12 lakh, but you have selling overheads also, right? The question has not stated only manufacturing. You have to take both type of overheads. Okay. So, okay, provision for contingency required at 10% of working capital, including that provision. Okay, so including that provision simply means it's working like this. See, if this is 100, sorry, this is 100, so provision for contingency is 10, and so this is 90. So you can simply do the cross multiplication as, since this is divided by 90, I'm going to multiply it with 0.1, right? And then we simply add both of them for the contingencies. Okay. Is this estimate of working capital clear to everyone? Yep, guys. Estimation of working capital. Is it clear? Yeah. Okay. Then let us do the recent exam question. Yeah. Practical question 14. Practical question 14. What is so in this? Let me see the practical question 14. This one. Prepare a working capital estimate to finance. Are we having one more class? Yes, we are having in the next Tuesday, right? Next Tuesday also we have one more revision lecture. Okay, so prepare a working capital estimate to finance the activity level of 52,000. Raw material is 400 per unit. Direct wages are given, overheads are given, overhead selling and distribution. Selling price is 1,000 per unit. Raw material and finished goods remain in stock for 4 weeks. Work in process takes 4 weeks. Debtors allowed 8 weeks for payment, whereas creditor allows 4 weeks. Minimum cash balance is 50,000. Receivables. Now here they are saying it's clearly that receivables are going to be valued at selling price. Okay, receivables need to be valued at selling price. So I think this is pretty easy question. Let me just take it to the file and try to solve it. Yeah, so we have to prepare a working capital estimate based on this. So we'll have to first prepare the income statement or the cost structure. So let's prepare the cost structure. So in cost structure, we have the raw material. So raw material is 400 per unit and activity level is 52,000. So this is going to be 52,000 into 400. That is 52,000 into 400. That's the raw material. Then direct wages, which is 150 per unit. So that's 52,000 into 150, right? That's 52,000 into 150. Overheads, manufacturing. Manufacturing overheads is 200 per unit. So that's 52,000 into 200. Right. And then manufacturing overheads is done. So this is going to give us the cost of production. The cost of production is sum of this entire thing. Cost of production is 39 lakh. Then we add the selling and distribution overheads. Selling and distribution overheads is 100 per unit. So that will be 100 into 52,000, which is 5,20,000. And then we have the cost of sales. Okay, which is 44 lakh or 4 crore 42 lakh basically. Right. So this is a cost structure, and then sale price material, they are saying it remain in stock for 4 weeks. So the stock of raw material will be simply this raw material consumption into 4 by 12. Right. Then finished goods also is going to remain for 4 weeks. There's no WIP as such. Watch out, WIP is there. Work in progress takes 4 weeks. So we have, say, stock of WIP. Stock of WIP will be taken as 50 of it, like half of that. Sorry. So stock of WIP will be 4 weeks. So when you say 4 weeks, we'll say full raw material, but we will take direct wages and manufacturer's wages only half of it. Right? And then this entire portion multiplied by 4 by 52. Stock of WIP. Now, same way we have the stock of finished goods. Stock of finished goods will be cost of production divided by into 4 divided by 52. So that's your stock of finished goods. Then we have debtors, which are allowing us, which we are allowing 8 weeks payment. And receivables are again, they're saying valued at selling price. So debtors will be at a selling price. So we need to add profit and then write down the sales also. So sales is 1,000 rupees per unit. So that's simply 1,000 multiplied by 52. And then, of course, the difference between them is the profit. So the debtors are going to be 52 lakh for a credit period of 8. So into 8 by 52, right? So that's your debtors. Then we take the cash balance. Cash is for 50,000. Cash is 50,000. So we take a sum of all of them to come at the figure of total current assets. Total current assets. Then we have from that current liabilities to be subtracted. Creditors allow us 4 weeks. We'll have just the value of creditors Creditors will be the material into 4 by 52, right? Stock of material, what happened? So that's raw material consumption into 4 by 52. This 4 by 50, oh, 4 by 12, that is happening. 4 by 52, yes, correct. So then we have the net working capital to be, there is something else missing. You can see it's 16 lakh, 23 lakh is the WIP, finished goods is 34 lakh. Stock of finished goods, 42 lakh. Okay, but what's the cost stock of finished goods stated? Stock of finished goods. Finished goods remain in stock for 4 weeks. Okay, so you can take the finished goods as either based on this, or maybe cost of sales is information is available. Cost of goods sold information is not there. So this has to be this only. Yeah. Okay, so creditors, this creditors. So creditors is based on the same thing, material. Whatever is the raw material consumption, we are assuming that same is the raw material purchase also, right? And therefore we are just taking as it is into 4 by 52. Okay, is this clear? But we know closing stock, but is the question saying it's a new company? No, right? The question is not saying it's a new company. So our assumption will be whatever is the stock of raw material, that itself was there in the opening also. If the question would have said that it's a new company, then we would have assumed that opening stock is 0. Got it? Sukana? Finished goods, we have taken cost, yes, cost of production. Because ideally we cannot take cost of sales, because in that distribution cost is also there. So selling and distribution cost is generally not included in the cost of finished goods, because those occur after the finished goods have been produced and when they are going for sale. Okay, sure. So with that, let's just stop here for the day, guys. We'll meet up again next week on Tuesday to wrap up this working capital chapter with the remaining portion, which is regarding the debtors management, payables management, cash management, and all those smaller topics, right? So with that, let's just call it a day. It's already time up. So see you in the next class, guys. Bye-bye. Yes.